Good afternoon, everybody. Or should I say good evening? I forgot it's 6:45. Feels like afternoon. Probably because I'm still drinking coffee. How's everybody doing today? Tough market out there. A lot of things got batted around. I don't know. I know everybody's waiting for me to say three words. And don't worry, they're coming. They are coming. So, Amazon down 3.4%. Broadcom down 5.4%. BMNR down 9.3%. Salesforce keeps falling, negative 3%. CoreWeave got smacked around, negative 6%. Hood down almost 3%. Meta down 2.5%. Nebius down almost 9%. NVIDIA down over 4%. Palantir didn't do too bad today, only down 1.5%. The Qs down 2%. Even QXO got hit a little bit. SMCI down. SoFi was green for part of the day, down 2.5%. The S&P down 2%. Tesla 4%. Zeta fumbling around, down 1.25%. Well, before we go any further, I give you my opinions on stuff. Please read the disclaimer. I am not your financial advisor. I am not a financial advisor. I have no idea what's happening. I just do a lot of research. Don't take anything I say too seriously, and please do your own due diligence. Thank you very much. So, thank you everybody for being here. Ray, what's going on? Chels, what's going on? Hope everybody's having a great day in a sea of red. A sea of red. The words are going to come. I don't care. None of this changes anything, my opinion. So, here's where my thoughts are at. Today was clearly a decisive risk-off session. Stocks fell hard because the market had to reprice two things at the same time. First, an abrupt jump in traded geopolitical uncertainty coming out of Davos. And second, a surge in global bond yields that tightened financial conditions in real time. I mean, if you were watching CNBC today, you saw a lot of it unfold. We had Bessent, we had Lutnick, we had a lot of things coming out today. So let's start with the core of it, the why. The biggest catalyst was headline risk around Greenland, no surprise, and more specifically, the market reacting to the threat of new tariffs aimed at multiple U.S. allies in Europe tied to the Greenland dispute. When tariffs enter the picture, investors immediately run the playbook. Higher uncertainty, potential retaliation, higher input costs, and a higher probability that inflation doesn't cool as smoothly as the markets hoped. Now, the second force that made today's sell-off feel even heavier was rates. We saw a global bond sell-off, especially out of Japan, which spilled into U.S. treasuries. Japanese yields pushed sharply higher, and that ripple effect hit global duration. When long-term yields back up quickly, it hits equity valuations, particularly growth in tech. And we saw it with everything I showed from CRM to Meta to Amazon. And that's because the discount rate on future cash flows goes up. That's why the selling pressure today wasn't narrow. It looked like a macro de-risking event. Look, there's no easy way to put this, okay? When those two forces combine, policy uncertainty plus rising yields, you get a third ingredient that's called volatility. We saw a very volatile market today, and as volatility rises, investors reduce risk, systematic strategies can delever, and the market's move can become self-reinforcing for a stretch of time that becomes uncertain. So today, it wasn't about one company missing earnings. It wasn't about an economic report. It was about the market repricing a world where tariffs might come back into the conversation. At the same time, global yields are moving higher. I don't care. Say it again. I'll say it a third time. I don't care. One day, I'm still a liar, everybody, because the S&P has not crossed over 7,000. But man, we're only at 67.96 on the S&P. June, what's going on? We're only at 67.96. There's not a whole lot to complain about. I mean, we've seen this playbook time and time again, and I'm just not worried. Maybe I'm just desensitized to everything, but this can go on for weeks. This can go on for months. But we saw what happened with Liberation Day. I think this is an overreaction. I really do. I think this is an overreaction. And things can get even freaking crazier. But look what came out of Davos today. And I guess last night because of the time difference. So, first, US Europe trade tension was the dominant theme. So, we had Treasury Secretary Scott Bessent publicly trying to cool the temperature, brushing off what he called hysteria, and implying the administration expects the situation to be managed rather than spiral into a full trade war. Markets heard that, but they still priced in the tail risk because the headlines were moving faster than the diplomacy. And that's something that you have to take into consideration. In this day and age, information moves at the speed of light. And this is one of the problems with the market. Things can spiral out of control over nothing because everybody has access to everything. And I don't know when I'm going to stop being a liar. I should have a shirt that's on fire because you know what? I'm continuously lying. 7,000 didn't happen. Maybe we don't even see 8,000 this year. I don't know. I don't have a crystal ball. But you know what? I can make you a promise. At some point, we're going to see S&P 7,000. It just wasn't on my timetable. But at some point, we will see it. Now, I think one of the big things everybody needs to remember is everybody's got an X account, everybody's got a cell phone, everybody has access to different news outlets, and it just fueled this. Everybody can change positions in their portfolio at the drop of a hat through their trading app. So, am I shocked that the market fell 2% today on uncertainty? No. Am I surprised that the fear and greed index increased? No. But I didn't go running for the hills. I'm not, I truly don't care. The way that I'm positioned, does it hurt? Sure. Just like everybody. Nobody wants to log in and see their account have a lesser value than the day before. But if you're not willing to accept that risk, you shouldn't be playing in the financial markets. You should be tying your money up in a money market account. Markets swing, headlines drive narrative, and that's all there is to it. Now, we had Commerce Secretary Howard Lutnick, and I'm going to make sure I pronounce his name correctly, unlike one of our friends. He also made some waves in Davos, and this is why I can sit here and make jokes about I don't care, because I truly believe the U.S. economy is doing really well. And when you listen to what he said, he projected incredibly strong U.S. growth, and he even talked about Q1 GDP being above 5% and warned Europe against retaliation. So the key takeaway from his speech today for me was it's not just the number, it's the posture, confidence on growth, pressure on rates, and a hard line on trade responses. When you listen to what Lutnick said, it goes back to something I showed Chris last night, and I think I read into it more than him, potentially. But you look at the U.S. GDP versus the next 9 nations. Are we really going to sit here and be worried about Europe putting tariffs on us? I'm not, because it's not in their best interest. They need us a hell of a lot more than we need them. And unfortunately, that's just the way it goes. When you have the largest economy in the world, you have more bargaining power. So I don't want a trade war. I'm also not scared of President Trump negotiating with a hardliner stance over the next couple of weeks, I think that we're going to get some really good buying opportunities and ultimately come out on the other side stronger than when we went in. So I'm truly not worried about it. And I think everybody remembers that follows the whole crew of people. I had the same attitude during Liberation Day, and I'm not going to say some of the other things about market lows and stuff, but you can't be worried about cycles if you're investing in great assets. And you have to be willing to buy higher because stocks and industries, they're directional. And I don't mind buying at tops. I really don't. Because you know what? Ultimately, we've seen time and time again, the markets continuously go higher, even if there's valleys in there, even if there's sell-offs. Ultimately, all the data that we have, gaps get filled, sell-offs get bought, markets trend higher over time. This is not time to freak out. What changed? Like, really, what changed? Do we think Apple's going to have a bad quarter because Davos is happening? Do we think that Amazon is going to have a bad quarter because Trump wants Greenland? No, none of that's happening. So, yes, a lot of things went down today. Yes, our accounts are a little bit lighter. That may happen tomorrow too. We could get a sell-off for the rest of the week. I can't tell you what's going to happen. Nobody else can tell you what's going to happen. But ultimately, when things get low enough, people will step in with cash. People will freaking buy. And I see you guys trying to make me laugh. And I promise I am not going to make that mistake with how to pronounce the name. Anyway, I really do think that this is going to blow over. I think this is the wrong thing to worry about. You know, I don't put a lot of stock in what President Emmanuel Macron, I don't even know if I pronounced that yet correctly, and I don't freaking care. I don't really put a lot of stock in what he said today about warning about a shift toward a world without rules. I mean, he's just angry over what Trump is saying. I don't really care. I mean, what I do care about is what's happening with China. So that's more of a concern to me. But look, we got earnings season starting. Netflix reported, we're going to get into that. I don't think anything that happened in Davos is going to matter. Tomorrow's the big day. Tomorrow, President Trump speaks. Let's see what he says. He's sitting down with Joe Kernan on CNBC, I think at 1 p.m. And I think he's given the speech before it. So we'll see. I just think that today is not the day to worry. Let's see what happens tomorrow. If the speech goes south and if President Trump stirs up a shitstorm, okay, then maybe we got a little bit of volatility headed. But right now, I just don't think that we're there yet. And all the Q4 earnings, they're in the books already. Q1 is a quarter of the way through, just about. And it seems like the big companies are just going to get bigger. And we're going to be in a good spot. So let's shift gears. That's the overall macro that happened today. I will make sure I pay attention tomorrow and do some type of stream tomorrow night about President Trump's speech and what he said. But there's no real data points today to really get crazy about. It's just a sell-off. We've all been through it. I think because predominantly the community that we are in is focused on technology, we feel it more than other people, which is the risk of being a tech investor. And there's nothing wrong with that. We have to be ready for things to go up and go down. So was today a full risk off positioning? We're not going to know for a couple of weeks. I don't really think it is. We'll see. So Netflix, let's move to Netflix. I know that a lot of people very interested in Netflix. And I think Chels said that she bought some today. Listen, I really hope that you don't need me to talk you off the roof, but if I did, I'm happy to. Um, you know, I just I think cooler heads will prevail, and I don't think that we're gonna have to worry about this. Anyway, I said last night I wasn't interested in Netflix. I gave some reasons why. I specifically don't think the deal is going to get done. But I will tell you, Netflix dropping 5% today. And after the quarter that I just read through, I'm starting to get a little interested on Netflix. And listen, this is one of the things I always say. I am willing to change my mind when data says I should change my mind. Now, I'm not ready to step in and buy yet. But I also don't know that Netflix deserved to get pounded the way that it did after hours. So let's go through some of these numbers. Stop. What should I be stopping? Yes, I am aware. So let's go through it. So basically, Netflix, in my opinion, met or exceeded all their financial objectives for 2025. Full year revenue came in at 45.2 billion, 16% year over year growth. Now, I think this is where I separate myself from other people. I think 16% year over year growth is fantastic for a company of Netflix's size. You can't expect them to grow at 25 or 30%. That's, to me, unrealistic. So, very happy about that. And keep in mind, I'm not a Netflix shareholder. So, I truly have an unbiased opinion. And I've been talking a lot of shit about Netflix over the past couple of months. So, operating margin 29.5%, up 3 points. That's interesting to me. So, almost a third of all their revenue drops to the operating line, which is interesting. Ad revenue for advertising increased 2.5x to about 1.5 billion. It's only their third year of selling ads. Interesting also. Big Q4 milestone, 325 million paid memberships was crossed in Q4. Q4 revenue increased 18% year over year. Q4 operating income increased 30% year over year. Those are great numbers, everyone. I mean, those are really great numbers. So I think that one of the reasons why it got pounded, in addition to the buybacks, was guidance. So the 2026 outlook on revenue, 50.7 to 51.7 billion. That's a range of 12 to 14%. So growth is slowing. They just did 16% year over year this year. They're expecting it to slow to either between 12 and 14%. I don't think that's a problem. I mean, really think about that. They're a $45 billion revenue company telling you that they're going to exceed 50 billion in 2026, and they're still going to grow at double digits. And the ad revenue is expected to double, which is also interesting. So I think that this is a little bit overdone. Q1 forecast, revenue coming in at 12.16 billion. You have operating income 3.9 billion, a 32% operating margin, 3.26 billion net income. Free cash flow, that's the Q5 number. Diluted EPS is going to be 76 cents in Q1 26 is what they're projecting. So I don't hate that. The numbers look interesting. If this keeps falling, I would get very interested. So let me bring up the chart real quick. And look, I'm not a TA by any means. but I do know how to read a chart or two. This does not look like it's bottomed, especially not after today. I would want to see, and look, I think this can go through 80, but maybe it doesn't. I would like to see something like what happened here before I start thinking about starting a position, because I am thinking about starting a position when it looks like this is done, because I do think this can rebound past 100 at some point in 2026. But until I see something like this, it's going to be very hard for me to open up a position on Netflix. They're the 800-pound gorilla in the room. Now, the big problem is the conviction on a deal getting done. Does a deal get done for Warner Brothers? Now, the problem I have is that they came out today and they said that they were going to upgrade their deal to an all-cash deal. I want to find the exact numbers. Hold on. So I believe it's still $27.50 a share. Give me one sec. New Netflix WBD deal offer. I think it's on their website, right? Okay, $27.75 per share, $83 billion deal for Warner Brothers Discovery, all cash. The change eliminates $4.50 in stock from Netflix, and the revised agreement is expected to enable a faster path to shareholder vote by April 26. The deal will be financed through a combination of cash on hand, available credit facilities, uncommitted financing. So we're going to go through the balance sheet in a moment. I just want to make sure that I'm not missing anything else. As I'm on the, let me show this. I have it up on Netflix's site, going directly from their press release about this. So $27.75. It's all cash, which, as a Warner Brothers shareholder, I want the Paramount deal. Paramount deal puts more money in my pocket. So I can't believe that the board is pushing this from Netflix. I think it's crazy. I also don't think this deal gets done, and that's always been my big hiccup with this ever since this started. I made videos about it. I've spoken on the Mitch channel about it. I think I spoke on Tanner's channel about it. I don't believe this deal gets done. Netflix is over 325 million accounts. You add HBO and HBO Max to that and all the other accounts from Discovery, they're going to be at 400 and quick math, like 70 million accounts, 480 million accounts. That's so much bigger than Disney. It's so much bigger than Prime. I don't think the FTC is going to let that happen. I really don't. That's my big hiccup with that. I think the FTC will allow Paramount to acquire Warner Brothers because they'll be the third or fourth largest in that combination. So I don't know. I think that's going to be an overhang for a little bit because Netflix has a $5.8 billion breakup fee, if I remember correctly. And there's a good chance that they're going to have to pay that out, I would think. So let's look at their balance sheet. This is from their financials that they just put out. All right. So remember, they're buying Warner Brothers for $80-something billion. And they have a total of $13 billion in current assets. They're going to be tapping the debt markets for a tremendous amount of debt. Now, I have no doubt that this is going to be accretive. I think content is king. But when I look at the balance sheet, this isn't a situation where they're going into this being able to write a check. They're taking on debt. They're diluting shareholders. There's going to be a lot of things that happens. So they're not in a bad liquidity position. They currently only have 13.5 billion in long-term debt. So they're basically unleveraged right now. From a cash flow perspective, though, here's the big thing. Where's their cash from operations? So call it 10.2 billion in cash from operations. They're doing 9.5 billion free cash flow or so because CapEx is right here. Sorry, didn't realize that they created the spreadsheet like that. So 9.5 billion. I mean, this should not come into play because them having to pause repurchases, of course they have to pause if they're going to acquire Warner Brothers. It's one or the other. You can't have both. They're either going to grow the company and acquire Warner Brothers, get all the content, get all the synergies out of the deal, or they're going to keep doing buybacks. I mean, shareholders have to figure out what's more accretive for them. I mean, personally, from a long-term perspective, buying Warner Brothers makes a ton of sense for Netflix. But we'll see. I think Paramount's going to have an easier time. I think the FTC is not going to give Paramount nearly as big of a hassle as they're going to give Netflix, but that's still up in the air. And until all of that gets settled, I think Netflix is in a tough position, but I do think it's an interesting time to start acquiring if it falls a little bit further. Because do we think Netflix has a moat? They absolutely do. Is it a brand that's recognized globally? Absolutely. Is there programming in many different languages? Yes. Are people getting rid of their Netflix accounts other than me? Probably not. I only reinstate my Netflix account when there is something I actually want to watch on it. But most people just keep it. You know, Matt, I'm sorry. I lied to you. Please join me. Check your WhatsApp. I just kind of went live, man. Sorry. I didn't check in. Sorry, Matt. I'm still a liar. Anyway, Maddie, come join us. Come join us. And oh, now I got the message. Very funny. And for those of you that were on the stream the other day, okay, I'm going to read you a text message that I got this morning. Freaking Biotech Ken, all right? I don't know where he gets his information from. I've never invested in anything that he has freaking said, but he was on, I think it was on last night, maybe? Yeah, last night I think he came on for a little bit. And he was talking about T-Raw, right? Market is freaking in a sea of red. This stupid company goes up 27.72%. Can you believe that shit? Crazy. Crazy. I don't understand biotech. I'm not investing in biotech, but I mean, he said it last night and it went up. And then in the group text, the man, he says, CRVS, expect 20 today. Now, I don't know how the hell he freaking, I think he talked about it the other day with us. And he was saying, if you can buy CRVS between 10 to 15 a share, it's worth buying. Their data is incredible for aptic dermatitis, and it's an oral MOA. I have no idea what the hell that is. This will be 20 a share. He said that on Sunday in a group text to me and a couple of people. And today he freaking said, expect 20. And what does this freaking company do? You ready for this? CRVS. Up 165% today. I don't know. I'm doing something wrong in my life not listening to him. I don't know. Did anybody listen to him? I sure as hell didn't. I mean, all this guy does is read through these damn clinical trials, and it's over my head. It is over my freaking head. All this stuff. It's like talking gibberish to me. The big slow listen to him. Look at you. Anyway. Steve, what's his last DM in the group chat? That was the last DM in the group chat. There's no more new picks. He actually came on here and talked about both of them the other day. So, yeah, listen, Chris and I both said it last night. I've only lost money in biotech. I'm not interested in any of it. And, I'm happy for him and whoever invests in this stuff that makes money. It's not my cup of tea. I don't understand it. I'm not going to pretend to understand it. And the second I start investing in that, I'm probably going to lose money. So it's just not for me. I will stick with the large caps and tech. Let's see. Oh, that's interesting, Shells. When I was in Argentina, there were Netflix billboards everywhere, so the business still has potential long term. I agree with you. Netflix has huge potential. I get worried about them getting a deal done. I really do. So I think that'll be an overhang. And I want to see what happens tomorrow. I mean, down 5%. I thought the earnings were good. Growth is slowing, which we kind of knew was going to happen. They're stopping the buybacks. I can't handicap this deal. If Paramount didn't come out of the woodwork, I think Netflix would have had an easier time getting the deal done. The fact that Paramount came out of the woodwork for a deal makes me think that the FTC is not going to allow the number one player to acquire the number 4 player or number 5. They're either 4 or 5. So we'll see what happens. I mean, it's going to be very interesting. And I don't know. At some point, Netflix is going to get very interesting. Like at some point, too low becomes too low. Big slow. Thank you very much. Truly appreciate it. We also got to talk about silver soon. And there's some other things I want to talk about. So let's see. What else did I have on the docket for today that I want to discuss? ServiceNow and OpenAI partnership. So give me a moment. Let's shift gears. And Matt, Maddie pops on, but Maddie didn't even check the message. I don't see a blue check mark on the WhatsApp from Matt. Just saying. Just saying. Still don't see a check mark. I don't even know if Matt's still in the chat. That's an interesting question. Does Netflix benefit from AI? I think they will from an editing standpoint, but at the same time, I'm not sure what's going to happen when we get AGI. I mean, the real question is, yes, all right, this is, yes, Gonzo, thank you. Netflix makes the 7th season of The Sopranos. So at what point do we get content where, and maybe this is something Netflix is going to work on, or maybe it's something that Alphabet's going to work on, or proprietary per movie studio or TV network from their proprietary information. But at what point do I get an option to say, I want another season of Sopranos? I want another season of Burn Notice. I'm just here monitoring my wounds. Matt, if you come on, I'll monitor them for you. How about that? at what point do we get an upcharged service where I can have my favorite TV characters in the same show together? I mean, yes, an eighth season of Sons of Anarchy would be amazing. A actual first season of the original 9, original 8, whatever it was, would be great. So I'm not sure how that's going to roll out. I'm not sure how AIG is going to really impact Netflix. Maybe they really benefit from it. Maybe they don't. Oh, which stock is enticing me more, Netflix or ServiceNow? Good question that I don't have an answer to. So this was probably the biggest headline today on the AI front because ServiceNow and OpenAI announced a multi-year collaboration focused on accelerating enterprise AI outcomes. So the press release described a deeper integration that gives customers access to frontier model capabilities, co-developed solutions with OpenAI technical advisors and ServiceNow engineers, and faster time from pilot to production. So they're saying that the OpenAI announcement adds a key scale data point. ServiceNow runs on more than 80 billion workflows per year, and OpenAI models become a preferred intelligence capability inside that ecosystem. And that's the distribution story, embedding frontier intelligence into the software layer where they actually work. The big detail that stood out was the push into native voice and speech-to-speech experiences. And it matters because it moves AI from typing prompts to real operational interfaces. So customer service, IT operations, HR, finance approvals, et cetera, et cetera. So they're basically going to build voice agents into ServiceNow. I mean, at that point, ServiceNow may be a little bit more enticing only because they may be able to increase net dollar retention by a good amount with those features. Now, I did say it last night, and I'll say it again here. ServiceNow has a lot of competition. There are a lot of ticketing systems, but ServiceNow is probably the largest one. And if they're doing a deal with OpenAI, and if they're able to streamline everything, and if Matt is able to come on, we would greatly appreciate it because he still hasn't checked the blue. I still don't have a blue check mark yet. He's boycotting me, which is fine. But ServiceNow may be able to get into a Palantir-esque model with the net dollar retention with the OpenAI models and reaccelerate growth. I have to do more research on it, but it is very interesting to me. So, Steve, raise my voice, I beg you. I don't know if I can raise your voice, but I can raise my voice. Let's see. Oh, yes. Okay. Did I watch the first episode of A Night of the Seven Kingdoms? I did. It sucked. I don't know what to tell you. It was bad. Like, what is HBO thinking? And that freaking second episode of Industry sucked also. Maybe I was just in a bad mood, but I was not happy that at those two episodes. Let's see. Game of Thrones season 8. I mean, aren't they coming out with a another series of it with Jon Snow, Sansa, and Arya? Aren't they? I have not seen The Pit on HBO, no. No, I don't think Microsoft or Salesforce are competitors for ServiceNow. I think they play in different areas. So I wouldn't be worried about that. Salesforce's CRM is something completely different, from my understanding, than what ServiceNow does. So I don't think that they are competitors now. Whoa. Okay, we got somebody who has more guts than me. Just shorted silver at 86.11 here. Hate shorting, but hopeful it will be a quick trade and work out. Price is ridiculous. You, sir, have more courage than me. More courage. I would never short anything. I don't have the courage to do it. And I can see silver's price getting a little bit more crazy before it starts going down. So I don't know. Tell Netflix to redo that thing for what? I mean, at some point we're going to get that, and at that point, I think Netflix becomes an unstoppable beast because you're going to see huge add-on packages for their monthly services. Why is SanDisk shooting up like a rocket? I mean, the AI build out is real and their components are continuously needed. The hell did SanDisk do today? Oh my God. Holy shit. Obviously, I don't have SanDisk on my freaking watch list. Maybe it should be on. Freaking 10% today? Jesus. All right, let's see what the hell happened. Shares soared more than 9% on Tuesday as the flash memory maker continued to see elevated investor interest. Yeah, that's all it is. The data center build out is real, everyone. You look at what Taiwan Semi said, and this is where we all screwed up, or at least I screwed up. How the hell did we not see Taiwan Semi, Micron, SanDisk? Why didn't we go down a layer? NVIDIA has been great. I believe NVIDIA is going to do great and going to continue to do well. But these other derivative plays really were no-brainers. They really were. So when I see, I do, all right, before I go down that rant, hold on. I guess we're going back to silver for a moment. Oh, Rusty, come on now. I took the weekend off from Seeking Alpha. Sorry. I actually had a lot of things going on over the weekend. I went to the card show, blah, blah, blah. You're right. My last article came out on Friday. I'll do better. I apologize for slacking. Man, I apologize a lot. Silver is getting out of hand at these levels. Let's see. Silver is an obvious of cracking 100 mark after that, maybe a pullback. I do think silver is going over 100. I don't want it to. Before I go over that, yes, I do think a Seeking Alpha subscription is worth it for the research. If you like reading different opinions, they also have a lot of good details, a lot of good tools. I think you get a lot for your money out of the Seeking Alpha membership. That's my own opinion. My own opinion. The hell was I talking about before I went into that? Oh, Taiwan Semi and the AI trade. So I do think based on what Taiwan Semi said and them expanding CapEx by 30%, that's telling us everything we need to know about the memory, about chips, and where this is going. Now, earnings season just started. Let's see what happens in the next 2 weeks. We get a lot of the big tech companies reporting. Let's see what they say for CapEx expansion. Let's see what they say on the numbers of cloud. Does AWS continue to expand and reaccelerate? Does Google Cloud have a larger backlog? Does Microsoft Azure have a bigger backlog? I think they're going to. So, look, NVIDIA under 180 to me, very interesting. Nothing today, nothing yesterday that happened changes the story for NVIDIA. So doesn't change the story for TSM either. I think they're both really good. Have I looked into Amcor? No. AMKR. I feel like a lot of people have told me to look into this, and it just keeps going up. Probably should have bought it. Probably should have bought it. Well, I didn't. Meta is interesting. Listen, you heard me last night. I'm not backing down from it. I think Meta is going to be the talk of the town in 2026. They got clobbered last quarter for a bad reason. The spread on their earnings. Now, keep in mind, this is a company that missed earnings by a gigantic amount because of a one-time charge. One-time charge. They missed by $5.66. But on a normalized basis, non-GAAP, they beat by 58 cents. The spread between has changed. It was a penny. Now GAAP is supposed to be more than normalized, which is crazy. There's 28 up revisions. Meta's going to blow this quarter out of the water from the way that this looks. The question is, can Zuckerberg change the narrative on the earnings call? I think he's going to. I think he's going to come out of the gate and lay it on the line, because at the end of the day, he saw what happened last time around. So how do you not come out of the gate? Question is, what is he going to use all the compute for? Is Chris Patel going to be right? I don't know. Am I going to be right? I don't know. The data looks like they're going to start hosting. Who knows? I don't know. But the numbers make a lot of sense. It's very inexpensive. And I think that there are a lot of companies that are trading at valuations that just don't make sense. Meta's at the top of the list. And I know Matt is still freaking listening. I will probably be starting a position in Meta for the small account challenge if it keeps sliding. They're expected to grow EPS by 18% this year in 2026, and they traded 20.5 times EPS for this year. That's super inexpensive. On a forward basis, they're trading at under 20 for next year earnings. Come on. That's too inexpensive for Meta, in my opinion. And I think that this is just a sleeping giant. I do think they will be between 800 and 1,000 by the end of the year. Nobody is leaving the Meta ecosystem. It's just not happening. I do think we're going to get a rotation. I think Apple and Alphabet will slow down. I think they'll still do well, but I think that you're going to see a fundamental shift to Microsoft, Amazon, and Meta because of how much they trailed last year. I mean, Microsoft could be the most complete freaking company. And I got to show this off. I thought Chris was going to jump out of his chair last night. When you look at the S&P 500 value companies, according to State Street, the Spider Index, we now have some new value companies. Apple, Amazon, Exxon, Walmart, Tesla, Costco. I'm sorry, when did Tesla become a freaking value company? When? Tesla actually kicked out Microsoft. This rebounds. Microsoft was in the top 10. This is crazy. Crazy. Crazy, crazy. But I think there's a lot of value in Amazon. I think there's a lot of value in Meta. And this earnings season is going to be very exciting. And there's a concept that I want everybody to think about. We will, I'm going to do a full video on this, okay? But I have an idea about why buying at tops is not necessarily a bad thing. And I'm going to put something together. I'm probably going to put it out on X. And the big takeaway for me is The markets are about momentum. I don't really mind buying into strength. And I do think that the bears that are screaming AI bubble, they're unwilling to see the forest through the trees. They're unwilling to buy into strength. And they're unwilling to own great companies at good valuations. They would rather see a 50% decline, which likely isn't going to happen. Didn't you write an article about? I did not write an article about this for Seeking Alpha. No. No. And for me, it goes into my idea about just buying the S&P all the time for retirement, because you're going to buy when it's high, you're going to buy when it's low, you're going to average out in the middle. But momentum, it's hard for momentum to break down. So we tend to see new all-time highs hit after new all-time highs. And think about last year. New all-time highs after new all-time highs. Anybody scared to buy at the first all-time high in the beginning of the year? Sure, they looked like a genius during Liberation Day, but they missed out on a lot of opportunities if they didn't get back into the market. So it's something that I am really warming up to a lot. I should invite Tevis and Roy. Would love to hear the three of you guys talk at the same time. We do a show on Fridays together. Are they available? I mean, Tevis and I were going to do something later, potentially. See if Matt wants to do something later, since he doesn't want to come on now. He's probably relaxing. Let's see. Listen, I like Microsoft a lot. What's the hardest part? I don't know what the hardest part is of investing unless you tell me what the hardest part of investing is. So let me know. We'll talk about it. Microsoft, I think, is the most complete company. I love the numbers. I think there's a tremendous amount of growth ahead of it. And I will hit it. Investing at all-time highs. And I started a position in Microsoft. So the hardest party is at the milk party. I second that. So I don't think investing at all-time highs is difficult if you're talking about an index fund. It can definitely get a little scary with companies. But if you look at the direction of the actual market, investing at all-time highs, and I should bring up a chart to make the point, so we will. And I'll bring up something from macro trends also. So let's bring this up. So heading into Liberation Day, we were at highs. Okay. Sure, it fell, but we rebounded. And if you were afraid to buy, making new all-time highs in July at 620, you wouldn't have rode it up to 682 and then finish the year around 695, or start the year at 695. So it's all momentum. And here's the biggest thing. Do earnings expand? Because if corporate earnings are expanding and GDP is expanding, it's hard to believe that the market's not going to expand. So that's why I don't have a hard time buying at all-time highs in index funds. Now, individual stocks is definitely a different psychological game, can be much different. I'm specifically talking about the broad market, where if you're worried about investing now, but you're a long-term investor, forget the downturn that happened today, okay? Sure, we went down a couple of percent, but we're still relatively at all-time highs. If you don't think that we're going to see SPY 750 or 800 in the future, why are you investing in the market? I mean, I know I can't time when stocks go down, and when they're going to rebound. But I do know that over time, things will work themselves out. You go to macro trends, and we bring up several things. One, the historical returns of the S&P. It's hard to be bearish in a market that has very little bear years or even down years. It's very hard to get bearish on an S&P market like this. And this is one of the reasons why I say I don't care, because I'm looking at the long term. And then if we think about, is the market expensive or not, I don't think it is. So we look at the, where's the earnings? I know it's in here somewhere. I probably missed it. Apologize, everyone. Earnings history. That's not the one I want. Hold on. Market indices. There is an S&P freaking earnings chart in here. I know there is. Here we go. Does that look expensive to anybody? This is a different market than it was in the 80s. This is a different market than it was in the 90s. I mean, in November 98, we were at 30.86 times. Right now, we're at 29.22 times. I don't necessarily think this is an expensive market. I really don't. So I don't get worried about this. I think the market's going higher. Steve, I'm with you regarding index funds, just DCA, but for individual companies, it's mentally hard to buy it after seeing the company run 50, 100%. I get it. Trust me, I get it. But here's the thing. NVIDIA, I was buying it during Liberation Day when it went to 110, to 100, to 95. I think I still bought it at 165 on the way up. So can it freak people out? Sure. But that's where the due diligence comes in. I don't mind buying NVIDIA up in the 165, 170 area because I think it's going to 250. And is it hard mentally when you've already purchased something at a lower point? Absolutely. But if you think you're going to make money on it, then it shouldn't be as hard to make that commitment. But you have to have a thesis and you have to think you're going to make money on it. That's the reality. Oh, wow. Gold hit that magic 5,000 number. If gold hits 5,000, I don't even want to know what the hell the headlines are going to be. The headlines are going to be insane. And now we have people speculating silver is going to hit 200, which is also insane. Yeah, if NVIDIA goes past 250, I will owe Tanner dinner. Yes, I know. I'm well aware of the bet that I made. Well aware of it. Yeah, listen, everybody's in a different position. You know, my view is different than Chris's. It's different than Matt's. Everybody's got their own investment style. Somebody texted me today something. I told them, I said, listen, S&P is where I have my retirement money. And that's not changing. It's a hedge against myself. And I'm a long-term bull. Do I know about Annaly? Yes, I do. NLY, Annaly, yes, I do. I'm not in it, but I know about it. I'm in, it used to be new residential income. Now it's, I don't even remember what the name of the new company is, but I'm in that. My high school gold ring is 1 ounce gold and paid $360 back in 99. Oh, nice. Well, PB, that's a big increase. Congrats. So I'm not sure what is better for retirement. I think better is subjective to your individual wants. QQQ is definitely more geared toward technology and growth with lower holdings, whereas SPY is more a broad market, 500 of the best companies, 500 of the largest companies, gives you more diversification. So for me, I like the S&P. That's just me. Am I still in Misty? I am still in Misty. And I'm trying to suck every last piece of liquidity out of it. Hopefully, Bitcoin freaking does something over the next 6 months and brings strategy up, which takes Misty up. We'll see. I'm not a Russell person. I don't like the Russell. I have a great friend whose name is Russell, but other than that, I'm not buying the Russell. It's just not for me. Do I think metals are overpriced? Let's put it this way. I would like there not to be tariffs. I would like to not go through a freaking tariff war. And metals going higher is very bad for the economy because that means input prices are going up, which means that margins are going to consolidate most likely. So hopefully metals get a little bit cheaper. What I am happy about is that oil is staying close to 60, which I am very happy about. QQQI is great. I agree. I'm in it. I like it. It's a great fund, my opinion. I like their strategy. Gold is nonstop. Yeah, I get it. It's crazy. Yeah, BMNR is interesting. I'm going to have to do a recap video and discuss it. Yeah, we all got taken to the woodshed on it, but this is something that can snap back. I mean, where's Ethereum right now? Let's see. Do I even want to look at where Ethereum is? $29.51 down 218 today. I did not want to look, but it is what it is. I did not buy anything today. Probably buying something tomorrow. I have no idea if the Clarity Act is going to pass, but Brad Garlinghouse is in Davos. Let's see what happens. Let's see what happens. I mean, I think this is a very unique situation, what's going on, but I wouldn't be scared of it. Look, the reality is Trump cannot risk losing the midterms. Okay. If we really think that he's going to self sabotage the midterms, I think that's crazy. I really do. I don't think that's going to happen. I think it's going to be fine. We need to get through the next couple of weeks. I think this will blow over. Yeah, it feels like a mini Liberation Day, but Liberation Day reversed, so will this. My average on Microsoft, I'd have to look that up for you. I don't want to give you a bad number. Taco Tuesday. I mean, not to this degree, but, is what it is. Look, the big story is going to be earnings, everyone. Thankfully, this is coming at a time where we got the Mag 7 reporting pretty soon. So, Can BM&R go below 30s? It already did. It's like 28.50 right now. It's already below 30. So yes, it can. LNG. Oh, interesting. Where was VG today? Hold on. VG was down a little bit. What about next? $4.86. Interesting. Interesting. I think it's good news for QXO. But I think QXO has a good setup. Rates, the economy, GDP increasing. I think it's a good setup for QXO. We just need Brad Jacobs to acquire a couple more companies. Yeah, I don't hate that, Charles. I don't hate that. Maddie, do you not want to come on? Are you boycotting? What's call Matt? Why can't I hear this calling Matt? Matt, are you there? Well, I tried calling Matt on WhatsApp, but I couldn't hear him for some reason. Maybe he'll come on. Who knows? He still hasn't looked at the link. I don't know if it's going below 20, but it's Ethereum would need to go to what, 25, 26 for that to happen? Oh, you know what? Matt's probably in Greenland. You guys are right. White House Quant in Greenland, you're right. What was I thinking? What was I thinking? So yeah, I think the more, or am I going to buy more Nebius? Nebius got smacked around today. I wouldn't be opposed to it. I think the moral of the story now is that we need to wait and see what happens. Matt is there for the ribbon cutting? Yes, he is. Listen, he should be at Davos right now. There we go. Am I the only one comfortable, even quietly hoping for a bit more of the dip so I can buy more? 3 wise words, I don't care. Yeah, I'm with you, man. I don't care. Weak hands get shooken out, and at the end of the day, this will reverse. May not be tomorrow, may not be the next day, but eventually this will reverse. AMD is going to do well. I just think that NVIDIA is going to do better. That's just my opinion. So I'm in AMD. I'm in NVIDIA. I'm not in AMD. So let's do this. There was something I wanted to watch. So hold on. 2 things I want to watch. Check this out, everybody. Let's see who said Netflix on the final trade. So I did not see this yet. And I think that I screwed up again with not adding. All right, it's got audio. Great.
Time for the final trade on this Tuesday. Let's go around the horn, Tim Seymour.
Yeah, we flew around a lot of topics tonight on this desk, but the topic of airlines, I think, is one that will continue to re-rate. I like Delta.
Karen.
Yes, Missy, congratulations on your additional show.
Thank you.
You didn't seem nervous. I think you did an excellent job.
You can get through this.
I mean, right. So Netflix, I would wait a day or two, but I do like it here.
Dan.
Our little girl's all grown up. You know what I mean? Like, we were all probably on her first show that you hosted.
Ever,
in the day.
yes.
Ever, all of us.
Like, yeah, 18 years ago.
Yeah, how about that?
Yeah.
Intel, I would not chase it into earnings.
Guy,
Feeling very
wait. No potty mouth in the final trade.
I didn't say
We had a lot of potty mouth tonight.
Yeah.
Disappointing.
Okay, then I won't say it.
You only have 15 minutes.
Transocean comes out rigged.
All right. Not really much of an explanation why they wanted Netflix. I don't hate it though. I do think if it goes lower, it's very freaking interesting. All right, so this is what I wanted to watch because I did not have time to watch it. So they're talking about specifically the Netflix deal. So let's see what they're saying about this. This contradicts what I was saying. They seem to think that Paramount is not likely to beat Netflix, which is interesting because I think that is going to happen.
Another check on Netflix here. The stock around the lows of the after-hour session following the streamer's narrow earnings beat. The conference call wrapped up a few minutes ago. Let's bring in Rich Greenfield of Lightshed Partners, who was on the call. He's got a buy rating on Netflix stock. Rich, great to have you with us.
I don't know how I follow that last segment, but
It's not easy. Not fair.
You don't have to talk about squats. What did you make of this quarter, and what did you hear from Ted Sarandos about this deal?
that they are absolutely committed to getting to close, right? Like they want this transaction. They are obviously they showed flexibility in adjusting to all cash. I think that's great. Makes it easier and faster to move this forward from a proxy standpoint. They'll probably get a vote in March or April. And look, I think this really, you see how focused Netflix is on winning this. I mean, again, nobody thought they were a bidder. And look, I think even listening to Ted and Greg on the call today, they were pretty clear that when this all started, they were sort of anti-acquisition. And as they got into it and they started doing due diligence on Warner Brothers, they believed this was something they had to have. And so I think that this is what makes it really hard. You know, you saw the commentary in the proxy this morning from Warner Brothers. It's going to be really hard for Paramount to come back because there is more value to the Discovery Global, the to be spun off piece of this that Netflix isn't buying than what Paramount had talked about. They had said it was worthless. Warner Brothers has said it's worth $3, $4, $5, maybe even $6 a share. That makes it very hard for Paramount to come back unless they're willing to really overspend on this, like to do something truly crazy from a valuation standpoint. And I don't think that makes sense for Paramount. So Paramount should just, I think, pack it in and go do something else with their cash rather than overspend to buy Warner Brothers. I doubt they'll do that, but I hope they do. For Netflix, I think they're really focused on winning. And it was interesting. They are far more confident in regulatory approval than what investors currently, when I talk to investors, they do not have Netflix's level of confidence on the regulatory side. And that was interesting to hear today.
Rich, it's Karen. So are you happier with Netflix? Let's say there were no Warner Brothers deal. Let's say it were just continue to remain independent. Do you like Netflix now with a combined, let's say they pay up some more from here, which I think they will have to do to close, or would you have preferred old Netflix?
Yeah, look, at this price level, Karen, I'm not sure it matters. You know, you've sort of been tagged for, right now you're tagged for doing a large deal. Netflix has never done a large deal. So you're sort of in that deal hell right now, or deal limbo. Paying a couple dollars more in the scheme of Netflix, I mean, they're going to generate $11 billion of free cash flow, at least in 2026. So I don't think paying a couple dollars more is not going to skew this. I think the question is does Paramount come out with some, 35, 37, like, do they just literally go for broke? And even though it's too much and too overvalued to do it anyway. And I think Netflix will pay any price. So Karen, I think there is a price where Netflix walks away. I think they really do want this. So I think you're in this position now where Netflix wins within this range of a couple of dollars. The stock's going to go up over the next year. They end up losing because of a knockout bid from Paramount. Stock is going up because it shouldn't be this far down on this process. So I think Netflix ends up being sort of a win-win. which do I prefer? I mean, look, I think from the power that it, if you think about sort of what they can do with Warner Brothers, I think it's hard not to be attracted to the opportunity. If you think back to Disney and Bob Iger and what he was able to do, he made the acquisition of Lucas, Pixar, and Marvel. And those content acquisitions were transformative. I think of Warner Brothers as sort of being a similar transformative acquisition. Just imagine what Netflix can do with all of that IP over the course of the next decade.
I still don't understand how they're going to get the deal done with FTC. I need somebody to come on here and explain this to me. How this gets across the line, how the FTC is going to allow Netflix to buy Warner Brothers Discovery when it's going to make them more than double the size of Prime. I'm not seeing it. I could be 100% wrong. I think Paramount just has an easier time buying Warner Brothers. In my opinion. Yeah, Parsa, I think the problem with this is the size that it's going to make Netflix owning Warner Brothers. They already have 325 million. I think Prime is the next biggest with 220 or 230 million accounts. So I would be very worried about a deal getting done on this. We'll see. Let's see if Netflix slides tomorrow. The overnight's open, right? Let's see. I'll go into Webull. Let's see. Let's see where good old Netflix is. And how the overnight markets are doing. It is down. I guess it's just not down as much. That's an ugly freaking chart, though. All right, NVIDIA moving back up a little bit. Overnight session. Palantir moving up. Where's SoFi? SoFi. Up 0.6%. Okay. Qs are up a little bit. Microsoft up 0.25%. Meta's up 0.25%. Where's BMN? Ooh, BMNR almost crossing over 28. That's not good. See what happens. Tomorrow could be another brutal day. It really could be. Let's see the SPY. Yeah, I don't hate this chart. I mean, what's the worst that happens? We go down for a few months. It would suck, but ultimately we'll come out the other side. So not worried about it. We're not learning much on the overnight. And look, tomorrow is all about what Trump says. So let's just hope that he doesn't say anything that just derails the freaking markets. Does Warner Brothers make anything good? Yes, they do. It's not Joseph Carlson in the streets. It's Sir Joseph Carlson. Let's see. Yeah, I haven't looked at AutoZone. I really should. Yeah, Trade Desk is interesting. I got to look more into it. Wow, it's 8 o'clock. Wow. All right. Here's what we're going to do. I got to get going. I got a few things I got to take care of. We may be back later tonight. I'm going to give Matt a call, see if he's sleeping or not. I'm going to give Tevis a call, see what he's doing, and we'll see what happens. Either way, I will be back on tomorrow. Probably one more time tonight, we'll say. I need to go get dinner and take care of a few things. So my email should maybe 9:30. I'll put something out, maybe 9:30. But really appreciate everybody being here. Wouldn't be doing this without all of you. The community is amazing. Everybody who's coming to the New York meetup, I'm looking forward to hanging out with everybody. And truly, thank you so much for supporting me. I really appreciate it. We got a few interesting things that are going to happen this year. So more on Project X in a couple of weeks. I will see everybody later. Have a great night.